Hello students, welcome to Current Affairs by Clarity for Sure.
The National Bank for Financing Infrastructure and Development or NaBFID is changing its borrowing strategy this year. Instead of tapping the bond markets, the state-backed financier is leaning more on bank loans. What is the reason? Lower interest rates and more than 10,000 crore rupees in borrower prepayments, which have eased its immediate funding needs. NaBFID had earlier planned to raise around 60 to 65,000 crore rupees this fiscal year, along with $1 billion through external commercial borrowings, including a $500 million offshore loan. But with banks now offering funds at sub 7% rates, much cheaper than the bond market, those plans are being revised. Managing Director Rajkiran Rai explained, at this point of time, bank borrowing has become cheaper, so I can easily borrow from the banks rather than hitting the bond market. This shift comes after the Reserve Bank's repo rate cuts, which allowed commercial banks to lend at lower rates. Many borrowers quickly refinanced, leading to prepayments of over 10,000 crore rupees this year, compared with negligible amounts last year. Repo-linked lending created a rate differential of more than 100 basis points compared with NaBFID's earlier advances. Last year, NaBFID's average yield on loans was 8.6%. But today, top-rated borrowers are raising money below 7%, making bank borrowing an attractive, though not permanent option. If rates rise again, NaBFID may have to return to the bond markets. Till June 2025, NaBFID had borrowed 53,000 crore rupees, most of it through bonds and a smaller part from banks. In the first quarter of this year alone, it borrowed 4,000 crore. On the lending side, NaBFID is funding projects in energy, transport, logistics and communication. It has already sanctioned over 2.5 lakh crore rupees. 90,000 crore has been given out, 1.35 lakh crore is in the pipeline, and another 1.2 lakh crore of new loans is expected this year. So in simple words, NaBFID planned big borrowings, but with cheap bank loans and early repayments from borrowers, it's saving money by avoiding the costly bond market for now. Let us try to solve some practice questions now. Number 1. What was NaBFID's earlier plan for borrowing in 2025 through external commercial borrowings? Number 2. Why is NaBFID currently relying more on bank loans instead of bond markets? Number 3. As of June 30, 2025, how much has NaBFID borrowed and what share came from bonds? Number 4. What was NaBFID's average yield on loans last year? Write your answers in the comment section. If you are aiming to crack rbigradeb, our NABARD mentorship and test series is designed to give you complete guidance, in-depth concept clarity, and exam-level practice. With expert mentorship, personalized strategies, and high-quality mock test, you will learn to manage time, prioritize topics, and maximize your score. So consider enrolling today and give your preparation the winning edge. And for more such information, subscribe to the channel.